Hello everyone, welcome to Yugi Forecast YouTube channel. This is the first video of Yugi Forecast channel and it is about Bitcoin. As you may know, Bitcoin is the most famous, the most valuable and the most traded and the largest crypto market. So that's why I decided to talk and analyze Bitcoin market technically based on NeoWave. Neo stands for Nearly Extension of Elliott Wave. It was invented by Mr. Glenn Neely. The difference between NeoWave and orthodox Elliott wave is the extension of rules. The number of rules are not comparable with orthodox Elliott wave because they are much more. There are too many rules to be memorized and to be tested during analyzing a market. And I would like to tell you a little about NeoWave because this is our first video and it's a very different approach of technical analysis. And there are too many differences, but here I would like to point some of them, the most important ones. Cache data. You can see the chart. It's it's not candlestick like we have here. There are candles or there are bar charts and also line charts and many more. But Bitcoin is something, cache data is something very different. Every segment of line here are called cache data. This one is the low of the market in a specific period of time. Cache data, it means lows and highs are plotted in order. If the low comes first in a period of time, here we have the yearly cache data. It means this is the low of the year and this is the high. And the third segment, here's another year. This is the low and this one is the high. Also in the third year, again we have the low at first and the high secondly. But on fourth year, we have the high of the market at first and the low at the end. But what are these? They are joining two cache datas, two periods of times together, and they are creating waves. Also, this is the second year, and this is the third, and this one is joining 2 years together. This is the high and low of another year, and this is connecting the high of last year to the high of present year, which is this one, and more. We can go on up to the end. So this is cache data. Another thing is that in orthodox Elliott wave we have impulsions and corrections. Corrections are flats, zigzags, and triangles. But in nil wave we have more patterns like this one here, which is a seven-legged diametric A, B, C, D, E, F, G. There are too many rules to be met to label this a seven-legged diametric. the most important of them is similarity in time. And imagine that we have A, B, C. This is a zigzag, but the post pattern retracement should be violent to retrace all of this wave C, or at the beginning it should break the trend line, like we may have something like 0B. 0B trend line should be broken in less time than wave C, but it's wrong here. It took two segments of cache data. So this can be an example, and there are too many rules. I cannot mention all of them here. So, and the other one is that we have logarithmic chart scale. As you can see, this is here. You will see the price of $100,000 at the top of the chart, and we have only $1 price at the bottom of the chart. If this is the bottom and this here is $100,000, so at the middle of the chart we should have we should have a $50,000, not $250. So this is the difference between arithmetic and logarithmic scale. In the arithmetic scale, we have $50,000 price here, but in logarithmic we have only 250. It was also another difference in Eliud in Orthodox Eliud wave. We have price rules, but too many or no time rules. But this approach of market analysis is enriched with time rules, price rules, post-pattern retracement, similarities, and too many other rules. Uh, so now we know about Bitcoin cache data, about time, price, logarithmic scales, and post-pattern retracements. Every pattern needs to have a retracement, a sharp retracement at the end. A sharp retracement is observed when the last leg of a pattern is retraced by a next move in time equal or less than the creation of that last leg. So let me talk about the Bitcoin market. We have an A, B, C, D, E at the end of this completed pattern. Uh, it looks to be an expanding triangle. An expanding triangle means wave A is shorter than wave C, and wave C is shorter than wave E. So it means we need to have a larger move than wave C here. Well, wave D took about 1 year of time, as you can see down here. It's the beginning. It has began in 2023 and is nearly ending right now, which is end of the year of 2023. So uh, I guess the new wave rules are telling me that it will take this much of time. You can see this square, and it's pointing to 1 year time. So on the yearly cache data, Uh, we we expect Bitcoin market to be on a downward slope toward $8,000, and we still don't know if the wave has ended here or it will move anymore to the upside. And why yearly cash data? You may ask this question. This is another rule in no wave that we need to start our market forecast from bigger time frames, because many small movements, many complexities are vanished when we are looking from a bigger view. It's like watching from space to the earth. You will see the real oceans, uh, sea, the beaches, and mountains, and many important things. So you will not watch very tiny things, and it's giving you a very clear perspective to the future. It was the yearly cash data, and it's a rule to begin from higher time frames and then move to the lower ones. Here I'm going to move to 6 month time frame with cash data to see if the price that I found on the higher time frame, if the pattern does match it or not. Okay, again on a shorter time frame we have the same single-legged diametric. This is half-yearly cash data. It means every two of these segments belong to 1 year. This is the beginning and the end of a year. This one is the high and the low of another year, and this segment is joining them. So we have totally two segments for every 6 month period. Again, we have the same structure. We have a like a diametric, and after that, we are watching an expanding triangle. And as I check it, too many rules of an expanding triangle, it meet it does meet the rules. And here we have the same time window, we have the same price structure, the same pattern. The difference is that the wave D is a zigzag here. The wave B of wave D is another correction inside it. So if wave C of wave D breaks here around $25,000, it means we are already on a downward slope and we can enter the market. But we still don't have enough information about the end of wave D, which we will talk about this later. So we have the same structures on two time frames, and all of the rules are made. But you may wonder, how should I wait? How long should I wait? And why should I wait to move uh, to enter a sell position at $24,000 while it's you can see the market right now, it's $44,000. Why do I have to wait this much of time? Actually, this is a post-pattern rule which should be met before entering the market, but do not worry. On lower time frames, you will have the opportunity to find the retracement somewhere around here. And also, we have another idea. The first rule of entering a sell position here is that when the trend line, right now I'm drawing the trend line from 0 to B point. When wave C breaks this trend line around here, around $33,000, this is the first position. This is the first opportunity to make a sell position to enter the sell. But this one is the fourth one, and this one is the second one and the most important one. This is also a sell opportunity here. But if we move to the lower time frames, we may find somewhere like $40,000, and because the complexity of the waves, the structure of every wave is different when we move to the lower time frame, and there are different patterns, so we can enter based on those tiny patterns, so we can find a better position, we can find a better opportunity to do a sell. So I delete this for now to make it neat and move to the lower time frame. Also, I'd like to point out something else here. Well, this square shows the max all the time consumed by this diametric, and this let me change the color of it to green for so it's visible, and this square shows the minimum time this pattern, this expanding triangle will take to be an X wave after this seven-legged diametric. The X wave needs to be at least uh, needs to take time at least like one of these waves we have here, and I took the largest, the most time consuming pattern, um, which is here it is. Excuse me. So we have so I need to change this. It was the minimum time it should take. Why? Because the longest wave of this geometric took this much of time, and we put it here. Also, you can check for other waves if they have spent more time. It's better to take the the longest wave, time of the longest wave, and have a perspective to the future. It was the minimum which was met, but the pattern not yet completed. But this square is the maximum time for this pattern, and the maximum time is the time the last pattern took. So let's move to the lower time frame to see many more complexity to see the complexity and many more opportunities to find the best place to enter a sale. So after 6 month cash data, we need to move to the monthly cash data. And if we move to the monthly, we there will be too much complexity. If we draw all of these legs, all of these waves with the complexity, but it's better it's better to see only the last leg, the last pattern. If we have all the patterns, there are too much complexity and it makes headache for you. There's a great problem. As I told you, it's one of the rules. We need to move from higher time frames to the lower time frames. And there is another rule. The minimum of mana waves you need to forecast a market, to analyze a market are 13, and the maximum is 55. There may be more than 55 mana waves here on this chart, but we are not taking care of that. We are only watching this last leg, which is wave D. So on the shorter time cache data, it's monthly cache data. We can see another symbol like the metric inside this wave D, uh, which was not present on the yearly cache data, but on 6 monthly cache data we had only a zigzag which had a flat inside wave B of the zigzag. But here are much more mono waves and you can see more complexity, but it's very neat still. We have a seven-legged diametric which can end maximum around 53,000 to $63,000. But how should we know if the price is going up to reach the highs or it will be going down on a downward sleep? It will continue toward the $7,000 or $6,000. Well, here again we are looking for selling opportunity. This is a trend line from 0B, wave G of this diametric, inside wave D, bigger wave D. It's also a zigzag. It has A, B, and C. If the trend line from 0 to B is broken in less time than wave C, around $43,000, which is the prices right now. It's right here. This is a selling opportunity. Right here at $43,000. But the next place, the next position will be at $35,000. You can see when we were on the higher time frames, the difference between entering the market for sell positions, the difference between position 1 and 2, it was about $10,000 and even about $20,000. But here we have a low distance, low price difference. But this second one, as I pointed, is retracement of wave C of this wave G is here about $35,000. If it retraces in less time, it means it's a good place to enter the market. Well, a new wave as we move to lower time frames, we find much more better, excuse me, we find better prices to enter the market. So on this time frame, it's again pointing to an expanding diametric, and sometimes it happens that on a higher time frame we are observing, we are detecting, we're finding a different pattern, but on the lower one it's something else. So it happens, it's natural, uh, because of the period of times. 6 months is much different than monthly. On the 6 month we had only a zigzag like this: A, B, and C, and wave B was A, B, C. But here we have a seven-legged diametric. It doesn't matter. It's not important. The most important thing is that there is a legal diametric that meets the rules. So it was the highest $63,000 or $52,000 is the maximum price we see for the end of wave D, and 6,000 to $4,000 is the minimum price for Bitcoin that we forecast for the next year 2024. And it's good to even move to lower time frame like biweekly. It means we draw the cash data for every 2 weeks, and it will give us a better perspective. Why? Because we are going to watch only this wave G from F to G, and here we are watching the complexity and the pattern inside this wave G to find a very narrow price to enter the market. As we move lower, we find better positions, we find better prices. But the good thing here is that from higher time frames to the lower time frame, we are watching the same. This we are watching still the same structure. It means we are on a good market and any specific a very good period of the market. So thanks for your patience, and I would like to point out that I will need I really need your support to support me and to be informed of our next videos. Please like and subscribe. It's the best way of supporting me and letting you be informed of the next videos. It will be an astounding analysis about Bitcoin on this time frame on biweekly. We have A, B, which will end here, and again wave C will go on maybe 48 to $53,000. Still we have A, B, C, D, E, F, G. It means we have an A, B, C, and inside wave B, which is mostly complicated than other waves. B is mostly complicated than wave A and C, but wave C can take more time than A, or it will be the same duration. So even on the lower time frame, We are waiting for wave C to end, and I think it will end in the next 2 weeks, maybe 1 week, maybe two, or it can be three. But I will try to follow the market and inform you when the move is complete, when the pattern is complete. And it's another rule that if we are at the end of a pattern, we can forecast the future of the market much better of the time we are in the middle of the market. So it looks to be the end of this wave, inside wave, with this pattern, the seven-legged diametric pattern inside ABC. So it will take about 100% price time of wave A, which is here, and minimum, we can't say minimum, but it could end around here. And if the wave C is completed here and it's retraced sharp with a sharp violent move, then it will be a opportunity, which is about $40,000. As we move to the lower time frames, we are finding better prices to sell. And if I find the opportunity to make another video when this pattern is completed, I will give you a better place to sell. But for now, let's see how the market will improve, what will be the structure, and what will be the best place to sell. But for now, this is a good position if we sell here at $40,000. Thank you so much, and please wait for my other videos. It will most of my videos are analyzed. Actually, they are made after a long period of time watching the market, checking all of the rules, price, time, behavior, similarity, structure, complexity, and many more rules, which I cannot mention all of them here. I can't take too much time from you, too much time of you. So please don't forget to like and subscribe and wait for my next videos. How it will be about gold market or S&P 500. Thank you so much. I'm not advising you to trade based on my analysis, because a forecast is not the only reason you need to trade. There are also other measures you need to take, like money management, using your own risk, and many more, and entering positions. So every trader should know about that. That for a forecast, a technical analysis is not the only thing you need to enter the market. But what I'm telling you here is what Neo Wave rules are telling me. We will see the Bitcoin for the next year. It's on a downward slope toward $8,000, and after that, in 2025, we will have and maybe a very big, large upward move. But for now, for the next year, for the year 2024, Bitcoin is on the downward steep toward $8,000. Thanks for watching, and bye till the next video.